Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, joined with Manu Choudhary, who's the co-founder of DeFinity and the CEO of DMA Link. Hi Manu, how's it going?
Hey Paul, not too bad. How are you?
Very good, thanks. Market's looking really interesting this week, and there's lots to talk about. So let's get right into it. What are you looking at this week?
So I hate to do this again for the third week in a row, but I got to talk about Gary again. We have a real problem with Gary. I'm not going to mention his surname because it would just, I'm sure, annoy people. But suffice to say, he's been complaining to the Wall Street Journal about how a lot of the DeFi protocols are actually CeFi in terms of the fact they're centralized, and therefore they should be registered with the SEC and regulated by the SEC. So it's very obvious to me that he is gunning for DeFi, which is not great. I don't think it's the end of the world. I think it's probably just a bit of a minor hiccup on what will be a very powerful journey in a very upward direction to the price action. But it's just one of those things that's slightly frustrating. But what's interesting, though, is at the same point Gary was whining and complaining to the Wall Street Journal, the good wholesome folk on the Monero project launched atomic swaps. So atomic swaps, if you're not familiar with them, are a way of transacting cross-chain transactions in a couple of seconds without the need for a central counterparty or a centralized exchange or custodian. So what it basically means is that when privacy becomes public enemy number one, which of course it probably will be at some stage, that when exchanges do begin to list things like Monero, then actually there's an alternative, which means you can continue to transact irrespective of whether it's listed on exchange or not. So this is a positive development. I think for anyone interested in liberty or freedom or privacy, which I certainly am. So I think it's very good. And we saw a little bit of a pump in the price of Monero on the back of this as well. Interesting news also, the move yesterday was very interesting. So we saw equities come off about 0.5%, certainly US markets, and crypto came off a little bit more across the board because James Bullard, the St. Louis Fed chairman, said he wasn't convinced that the inflation would be transitory. How shocking. I'm absolutely amazed and blown away. Yeah, apparently it's not transitory. Wow. I had all my expectations set that, the price of butter wouldn't double again. And yeah, here we are. It's doubled again.
Yeah.
So again, now people are saying, oh my goodness, he's going to basically taper. No, he's not. There's no way the Fed will taper this year or next year or the year after, or pretty much ever, because they would absolutely destroy this recovery, in inverted commas, because this ain't really a recovery. So it's interesting that he said that, but I think it's to essentially, well, it's interesting because I think it normalizes what is going to happen next. So they've sown the seed to say that they're concerned about inflation, they're concerned about what's happening, and they will take some kind of action in the future. Who knows when, but at some point they will take action. And I think it lays the foundation for when we do see this correction in equities and when we do see this correction in crypto, which we are expecting in the next couple of weeks, then there is justification to say, hey, if we print a bit more money, maybe we can stabilize things and we'll worry about inflation when things are stable.
Exactly. Yes. So things will go down before they go up, basically, and they'll just be printing more. But I suppose one of the issues is that they've got to show that they're credible. And if they keep saying that there's no inflation or it's transitory, the market's just going to say, look, that's just not right. And it could work against
that's
them.
true.
Yeah.
But Paul, I'm appalled your question, their credibility. These are the people that since 2009 have been talking about the US recovery, which ain't happened, by the way.
Yes,
they are very credible and their forecasts are very accurate, like every other central bank in the world.
Brilliant.
Do any of them have credibility? Really?
Not really. I mean, no, just look at something like shadow stats that you mentioned a couple of videos ago about what's really going on. And we all know what's really going on the high street and where asset price inflation is headed. And so to say that this is all transitory, it's just a question of when it gets out of control and we head towards something like hyperinflation. And so the markets is really where we're going to see the sensitivity to those comments. And like you say, the markets came off a little bit. Will they continue? Well, let's have a look at the charts. So here we are. This is the chart of said S&P 500, and on the face of it, this is just an upward trend. The market hasn't changed direction. The trend rate has been relatively smooth, but we looked at the VIX Index, which I'm going to come to in a moment. So basically, the VIX Index is showing me something different, and some of the other markets are showing some different setups that I think we should really be aware of. Now, the Dow moved into a new high and came off. That's not really bearish as yet, but it's still showing a reluctance to push straight upwards. And normally when the markets are moving into good, strong trends, they break the highs and push upwards very aggressively. This is just considering it on this high and not moving up. So I'm like, well, why isn't that gone yet? Now, of greater concern are the Dax Index, which has done exactly the same thing. It's sitting close to this trend line. So again, the overall chart is still bullish, but why hasn't it gone yet is what I'm asking myself. And then if we look at the Hang Seng Index, wow, what a difference. I mean, this has just collapsed. It had a bit of a rebound in the last session on the weekly. But if we go back to the daily chart, let's have a look at this. I put this in the weekly twice because it looked very bearish, first of all, and then it rallied and looked like it was going to come off again, and it's doing that again. So this is risking breaking these lows and continuing down. We've also got the same setup in China, where this is heading towards what we would call a descending triangle, which is usually very bearish, goes sideways for a bit and then collapses again. So quite what's going on there, I'm not sure, but there's definitely problems in that part of the world. Now, where there haven't been problems is the European stock markets and in the US, because of money printing, as you quite rightly said, Manu. But one of the leading markets has been the Swiss market index. This has been pushing into new highs and leading the way higher, looking much more bullish than anything else. But here we have a potential double top that's forming. So as you can see, the market's gone up, it's come back down, hit support, gone up again, and it's come back down again. Now, this is a potential double top. If it breaks this level of what we got here, it's 12,296, that sort of area. If it breaks through that, that will complete a top. So that's a really important level to watch for this week. Until it's done that, the top isn't in. But I like the way this price action looks like a top. If we look at some of the other markets, we can see the CAC 40, which is the French stock market. The way it dropped here is really aggressive. It's had a rally, probably will bounce back into that big gap, because markets tend to do that. It's had a little bounce into the gap. It might have another go, but that is no longer bullish. And look how bullish it would have looked in this phase and how quickly this has turned around. So the reason why we look at some of these other markets is because they can lead the way in the stronger markets. So when the weaker markets start to turn, they can be a leading indicator. Now, one of the other markets that is really key is the VIX Index. Now, we talked about that last week, the way it went straight up towards this really key level at 25.16. Now, it's backed off it, which is par for the course, really. It's done that so many times. You look at big move up, big move down, big move up, big move down. But what I've highlighted in this weekly document that's just gone out is that these lows are rising on this occasion, whereas the lows were falling to the downside. They're now starting to rise, which suggests to me there's been a bit of a pickup in hedging positions, and so we might see this go straight back up again. So watch out for volatility. Now, we talked about the markets in Asia, and I wondered whether one of the reasons why they're under pressure is because of shipping costs. Obviously, exporting from those regions can only be really done by sea, or is mainly done by sea. And if the shipping costs are going up, that's not good for anybody there. And we've got the Baltic Dry Index, which is an index of the shipping lane costs across the main routes across Asia. And this is pushing into 2010 highs, maybe even 2009 highs, and continues to look very, very bullish. So if this extends higher, it's going to be inflationary. It's going to be a problem, and we're going to have to see it further down the line. Now, one of the final couple of things that we'll look at here is the dollar index, because the US dollar is a very important indicator of where asset flows are. And if the dollar rallies, then it suggests that there's a covering of risk. And I would suggest that this has got more to go on the upside. It also hits commodity currencies hardest, like the Aussie dollar, the Canadian dollar, which in turn can hit other risk assets. So that's why dollar strength can pull money out of the emerging markets and away from more risky assets. So the dollar itself is rallying. It's not anything aggressive. It's not got out of hand, but it is broadly moving higher. So that can gently put pressure on the equity market, which could turn into something a bit more aggressive as we go forward. Now, looking at the Bitcoin chart, which is still in this rally phase, which is part of a correction. This was the major top. It's rallied into this correction. And the question is this a new trend? Will it go to 100,000 from here, or are we going to see a correction? I still favor the corrective phase. I think it will come back down, maybe stay in a range before it goes up, perhaps into next year. So 2022, I'm expecting 100,000 plus. It's just a question of how it gets there. And it's hit its first major resistance point. It's turned around and it's moving low from here. There's a Fibonacci resistance at 51,085 and 5,400 is my stopping point. If it gets below there, I'm going to have to really consider this to be the rally, and we'll move those targets of 100,000 into the foreground rather than background. But for now, I still think this is a rally in a bear market, and this will continue to go sideways, given that the other markets are looking toppy and there's a potential risk-off scenario coming forward. I think that's the way to play it. Now, Ethereum always outperforms. We've always expected it to outperform, so it's continuing to outperform the Bitcoin chart, but it's looking more bullish than the Bitcoin chart, as it would do, because of course it's going to outperform it even if they go down. So this is consolidating around current levels, but I'm again looking at a intra-week potential double top. So if this breaks back below 29.48, that will complete a double top. It's not done it yet, so there's still time. And then that should bring all the markets back down into this range. And then we should see potentially range trade for a few months before we build up to this big move that's coming in 2022 potentially. So that's how I see it. Rally in a bear market, still bullish long term, but we just got to play out this consolidation, get the timing right for these big moves, and keep an eye on the main stock indices. So, Manu, any final thoughts?
I guess any final thought I'd say is that I think if you look at Cardano, that's quite interesting. We are above the all-time high again, and I think, well, there's a couple of reasons for this, but one of the reasons I think is that again, I was very excited about the London upgrades, particularly EIP 1559, which was hopefully going to reduce the volatility of gas fees. Now it's done this. Gas fees aren't as volatile, but they're still bloody expensive, and it still grates a little bit to do transactions on the Ethereum network. So yeah, I think it's going to be interesting to see how some of these other DeFi protocols begin, I think, to outpace Ethereum at some point very soon.
Interesting. So, where is there other opportunities for lowering the gas fees? Where else could the competition come in to do that?
So you have obviously third generation blockchains like Cardano, arguably one of the best third generation blockchains, Polkadot, that essentially both of them were founded by all the co-founders of Ethereum, and essentially they built those layer one protocols in order to remedy some of the issues and problems that you had with Ethereum. Now, arguably, when they move from proof of work to proof of stake, a lot of the issues are going to be remedied, but that's not going to happen anytime soon. So it'd be interesting to see when again they begin to start launching their smart contracts, which I believe for Cardano will be next month, and for Polkadot, I think they've finished their last parachain auction. So I think that's going to happen very soon as well.
Fantastic. Well, everyone, I'd just like to say if you could like and subscribe the video, that would be fantastic. Hit that bell icon as well, because we will at some point be putting out intra-week research, and that will be highly time critical. So if you want to receive that, I'd suggest you hit the like and subscribe button so you don't miss them, because it will be looking at levels that are just about to break, as we've discussed on this particular program. And just to say thanks a lot for listening, and we will catch you next time.